Hello, hello. How we doing tonight, guys? Let's bring my chart up. Can you guys hear me all right? And can you see? Doing good, Alex. Doing good. We can hear and see. Lovely. Lovely. We'll get right into it tonight. And, days like these, right, they're usually a little harder for everyone. A little bit of some high resistance. As I was saying in the weekly outlook, it is to be expected when we are at a point in price like this, right? If you want more detail, as I said, we covered it in the weekly outlook, but it's a little harder, right? And when you get high resistance like that, your job as a trader, at least in my opinion, in my, how can I say this, visualization, or I get my psychology with trading, you should be in capital preservation mode. You shouldn't be in, okay, how can I make money today? It's no, how can I not lose money today as I recognize the current conditions? We'll talk about this inversion fair value gap, which once again we outlined in our weekly outlook. And yes, there is a reason why I don't include the volume imbalance here. I did talk about it, how I included the volume imbalance and use quarters in this area. But I wanted to showcase the one area without the volume imbalance as well. But the true levels that I personally use are the full fair value gap, which in this case is this whole fair value gap. And of course, we had our order block and premium new week opening gap, which is quite further. For now, I just want to see the respect of this bottom area. As you guys can see, we closed above 0.25, which is that first quarter. And so treating it as, once again, as I said, the easiest way to understand it is you split those quarters into 4 different fair value gaps. So now we close above the first one. I want to see the respect of this bottom line, and I want to see that drive price higher, more specifically into our new week opening gap. We've had the same result on ES. Let's actually bring our quarters in here as well. Where in this one, I don't think we closed above. Let's look at it. I think we closed just below. Let's look at the actual values to be sure. Top of the screen here. 5731.75, 5731.75. We closed right at it. So we didn't close above on ES. We did close above on NQ. NQ is the strongest. ES the weakest, so it is a little bit to be expected, to be understood. The important point here on ES is that we closed above this liquidity. Same thing on NASDAQ, of course. But on ES, this still shows intent to go higher, which means that I will still be looking for continuation. I think I'm gonna get used to starting these calls like this, just looking at, okay, well, what did we see on the higher time frame? What does that tell us for tomorrow? And then we can go down the time frames and actually see our stuff. Let's just remove historical sessions here. Let's bring it up on our little guy right here. Same thing, let's remove it. And we can look at the specifics of today, which if we look at it, right? What do we see? What can it tell us? First of all, I do want to remove those higher time frame levels, but at the same time, I don't. Let's remove the blue line here. That's not what I wanted. Let's try and keep our charts clean. So let's do this, but let's do this. It might look a little bit better on the lower time frames. It does. It does. And looking at this, right? We're looking at liquidity. We're looking at everything. Well, we had a London framework, but we did not return to this low. And if we look at Asia, we see that NQ has not taken out Asia low, but ES has. This gives you SMT, and of course you can just visualize that SMT without having to see the London and Asia session, right? You can just visualize the SMT right away. I just like looking at session SMT specifically, as to me it is more important than any random SMT. So we're going to mark it out as such. What does this tell us? Having a low form during the London session with SMT. High probability. I don't want to say point in market structure, but in this case, in the case of a bullish day, right? High probability low of day. If it was a bearish day and we formed a high probability high of day. So in this case, and taking into consideration the power of 3, right? We opened, ran lower. Of course, on ES, we formed that lower low at this point in time with the SMT, and then we started expanding higher, and at 9:30, right, at New York Open, this is where we can now see further things. But in terms of power of 3, we open, formed a low, are expanding to a high. So that is a very clear bullish profile, which means that on a day like this, I only want to focus on longs. Now, of course, does that mean that I can take shorts? No. But I understand that the shorts I will be taking for that specific day are going to be retracements. So if I'm trading short, I'm trading a retracement. I'm going to have a retracement objective rather than an expansion objective. And I'm going to be looking for less out of the trades that are going to be counter trend, counter longs. Does that make sense? Here, let's actually bring just the open price, show the last two 4-hour opens. So we'll have 10 a.m. open here and the afternoon, not the afternoon, sorry, the 2 p.m. I do want to revisit the news because I don't remember what news it was. I remember it was an uneventful news. So core retail sales and retail sales here that we had at 8:30. If we go down here after visualizing that power of 3, let's remove that drawing as well. It means that I start trading at 9:30. Now, if I'm trying to frame longs here, well, we've already been expanding in the overnight period. What is that? 5 a.m. to 9:30, right? 5 a.m. to our New York Open. This is the in-between of the London session and the New York Open. So if we've already been distributing there, I understand that we need to retrace before we can continue. That is what I always look for, right? Keeping in mind the fact that the markets are run by algorithms, which is the whole mentality behind the way that I personally trade. I understand that we first need to run stops lower before we can continue, since we've already been expanding for some time. So first thing I'm going to be looking is at 8:30, do we form a clear manipulation? And let's actually bring it. This is our 8:30 news right here. We do not. There's nothing clear about this. And if we look right here, we don't have SMT. These levels are equal on NASDAQ. Well, pretty much we do, because equal on NASDAQ and taken out on ES. But whether there's SMT or not, we don't have a clear Judas swing. All right. Even if there is, well, at 9:30, you could still look for long since you did have a retracement here. Personally, right at 9:30, I was looking to long, right at the open. I had no reason not to look for a long. My power of 3 was clear to go higher. Of course, we had our session frameworks, but due to the SMT, we could disregard it, right? Looking at London high and low, I can bring it back here for a second, but looking at that London high being taken out overnight, London low remaining open, but we had SMT here, so we could disregard that framework. So truly an A+ setup going long if right at the open I see SMT. If we look at that 9:30 right here, sorry, I just moved some stuff. If we look at 9:30 right here, we can see SMT, right? We see that swing formed at 9:28, and that swing we formed at 9:31 here is lower on NASDAQ, higher on ES. So very clear SMT at the open. In moments like these, I'm not going to lie to you guys, I just like to click the button and get in. That is not what I did today, right? Following a model. But these are very high probability moves that are quite, when price is so clear in these areas and then you have SMT get formed, it just tells you that you can look for a trade. But you're waiting for a rise model, you need a breaker block, and then from that breaker block, you're looking at an overlapping PD array. Well, first one I was looking at is, of course, this inversion fair value gap, but we don't pick and choose. We take the first retracement into an onside inefficiency that it gives us. And in this case, it would have been this beautiful inverse fair value gap. And I believe I saw in chat this morning someone say that they saw that trade, but only after the fact, right? It was too quick for them to enter on. And if you were looking at charts live this morning, you do understand that this tiny little guy, this tiny little wick, right, that formed on the bottom of the 932 candle was extremely quick, right? We opened low and then expanded very aggressively higher. So yeah, sometimes you won't have time to enter. That's the truth, right? If you had a bot, for example, it would place a limit as soon as this candle closes. Well, for me, I saw this candle close. I was ready. I already had my plan in mind. I already knew what my objectives were, for example. I know that if I'm entering on this, Well, first of all, my stop was here personally. And once again, I tell you guys quite often, the 3PD array stop loss rule is a great rule for beginners. It's always going to give you a stop loss that is good, but it's not always going to give you the best. For me, in this case, we already traded down into the wick of this candle, which I refer to as a resistance block. Right? This is something that ICT teaches, a rejection block, sorry. But resistance block is pretty much what it does. So I see us trade down into it. If I look at the midpoint of this candle specifically, and once, I don't know if that's something that ICT taught specifically, that's just something that I utilize. See the midpoint of this wick, we didn't have any body closes below it, so I don't want to see a body close below it. Since we already traded down into it, especially since SMT formed there, that's just very clear to me that I don't want to see price trade down there. I like to mention these things to you guys, but truth is, 3PD array stop loss rule, easy. Inversion fair value gap, this is yet to be a fair value gap, so inversion fair value gap once again, order block, place it at the swing low. Now, to look for a target, I need it to provide me with enough risk to reward. Well, what about this 15-minute data high? Why do I call this data high, which is the high of the news? Well, as I said, 15-minute. So I'm looking at the 15-minute candle from the news, which in this case is from 8:30 to 8:45. This is the high of that specific candle. This is the low. And if you guys look, very, very nice short framework after. We'll talk about this quickly. I won't share the statistics this time, but this is a statistical framework. This level is extremely, I was almost there, extremely high probability to be met. And if we look at the risk to reward at this point, you have a very nice 1.91 R, almost to R there. So that is just a very clear objective. And for those of you that did backtest the Rise model quite a bit, you guys know you get these trades sometimes that literally last 3 minutes, right? What was that? Was that 3 minutes? 4 minutes probably. Yeah, 4 minutes right here before reaching your objective. And that's just awesome. Those are the best. Quick in, quick out. But as I was saying, I noticed someone missed it this morning. Well, these are a little bit quicker on the dot. A little bit harder to trade. And then we see this 0.25 right here. And let me actually remove the 0. This is our higher time frame level, right? Which in the case that you do not include the volume imbalance in the fair value gap, right? The 0.25 is just above the fair value gap high here. But for me, that's my higher time frame level. That's the area that I want to see us expand past. Once we go above here, and when we slow down, that's a clear sign to exit. But for me, I took profit here at the high, data high, as I said. That's also current daily high. Now, what do you do after? Well, you have to trail aggressively, right? But how do you find some high probability objectives? Well, the only other objective I personally had was this level. So this is where I took another contract out. Then I had a stop loss. I trailed it here. This was a very aggressive stop loss. But if we refer to the, anytime I see a retracement, okay? A very aggressive retracement is what I meant to say. But anytime I see a retracement, I'm always looking at my first discount inefficiency. Now this seems to be just at equilibrium. It is. I just wanted to confirm because looking back at it, it wasn't. Right here. If we go down here, retrace into this range, and this is also where I like to bring OTE into things. So I drew it in the wrong way. Let me just reverse this. I like to use these OTE levels, optimal trade entry, right? So you have your range, you have equilibrium. I look at the first discount inefficiency and I say, well, if this is a retracement, it's going to stop there. But I also say, well, if this is a retracement, I want to allow price to return here. So after the partial, I'm going break even. Then I take profit here again, but I don't trail my stop. Even though that's like a 130 handle move, recently we've seen a lot of volatility. So 130 handles is not what it was 3-4 months ago, right? But once I see this level, so we retrace into that OTE, which is from 0.62 to 0.79. This is just a midpoint of it. We retrace into it. We respect this fair value gap. And then we start expanding higher. If we want a clear time is as soon as we inverse this this fair value gap, so it becomes an inverse fair value gap, we close above this line, then at that point in time, I'm trailing my stop up to here. And with a wick this big, I personally trailed it all the way here. Once again, not wanting to see price trade into this wick. And I got trailed. And let's say you just had the easy mechanical way of trailing your stop. It retraced to my retracement objective. Now I want to see it continue, reach for that opening range high in this case. This is why I like to place the text at the center so that I can still see it like this. But I don't rarely talk about how I manage trades because it's very simple. It's okay, partial, here, let me mark it out as such, partial, break even, and then take profit every time I see a key objective. It is really that stupid. But when I want to offer, or just when I want to let my trade have the opportunity to run further, my stop is always based on the first discount or premium and efficiency, and I always like to let my trade run to OTE. So sometimes even past that first premium or first discount in the case of a long in efficiency, to allow for price to return deep into the range and then offer continuation, which in this case we didn't get. It fully reversed. So whether you got stopped out here or you got stopped out at break even, you had a very nice opportunity to take a partial and a final objective before getting stopped out. So if you had more than, I mean, I want to say 25%, but yeah, 50% off at the partial, 25% of the original position there, you have 25% left that gets stopped out. That's okay. But any more than that still left in the position would be too much. And even 25% is too much for me. I like to take a first big partial, especially at 1.91 R. That's going to be 50% my position. And then I'm going to take off everything but 1 or 2, which always leaves at a maximum of 50% of my position left as a runner. I've just found that leaving big runners often leads to more disappointment rather than more return for your trade. But there we go. That's the trade I took this morning. I was one and done. As soon as I got stopped out right here, I wasn't interested in getting more out of this day. But we also had very nice opportunities to go short if your bias was short. You had a very nice statistical framework. And you also had PM opportunities to go long. So we'll look at both because not all of you caught this morning trade. As I said, it was pretty quick in that sense. And perhaps some of you were even bearish. So let's go look at it, right? If I was bearish here, I'm looking for a bearish breaker. We open right here. I'm looking for a bearish breaker. I don't see any. I mean, I'm not looking at SMT, of course. We do have SMT here, right? Which means this is a bearish breaker. So let me actually mark it out so you guys can understand better. So since we have SMT at those highs right here, we can frame, let's do this. We can frame this range from this high to this low. Let me mark it out with a fib so it's a little bit easier, as a breaker block, because this move higher broke the high of this range. It's a little bit weird since we took out the high and the low on the same candle. Mechanically speaking, this is a breaker block, so it's kind of hard for me to tell you guys that sometimes I will treat this as a breaker and sometimes no. In this case, there's absolutely no way, because we took out the low of that range at the same time as forming the high that formed the SMT. I would more so view this as consolidation. But it's important that I still mention it because I'm always speaking about simplicity and mechanical and following your rules. Well, technically, based on the rules, this would be a bearish breaker. And truth is, this would be a win. For me, this would never be a trade, as I explained. But we'll look at it. This is quite far from the breaker, to be honest. Well, I mean, 9 handles. Sometimes I say it's good enough. Sometimes I don't. And you know what? This time we're going to be pessimistic and say, well, in this case, this fair value gap would be good enough. And if your entry was right here, your 3P array stop loss rule would be inverted fair value gap, fair value gap, fair value gap. So at the high of this fair value gap candle, which actually leads to a win. So nothing bad to say here on the setup that I didn't like with the shitty breaker. Well, not shitty, but it's a breaker on ES, right? Formed with SMT. It would have worked great. Let's see, opening range low is a clear first objective and offers enough risk to reward that is just definite for me, right? The New York Open, we formed that low. That is a clear target. And of course, it's weird for me to look at this because I was bullish today. I was looking for longs. And so I would have never considered this short. But if you came in bearish, well, you would have skipped this long and then had the opportunity for a win here. We've also got data low, as we were talking about, right? Which is a very high probability statistical target. If you have right statistics, you guys can look through it. Definitely some very nice stuff there. And I mean, what else? 4 standard deviations, right? Does it align with liquidity? Well, I have this level. I'm always talking about old consolidations, right? So in areas like this, I don't really know where price will stop or even if price will stop. So I'll just, usually I won't be on a 1 minute chart here. I'll just go to a 5 or 15 minute chart and look for swing lows within this point to target. And I look for, okay, well, do any of them align with my standard deviations? So see, I have one here, 5 minute swing low, 5 minute swing low. When it's a large range, I'll also refer to the 15 minute chart. And I'll have them all drawn up right up until current low of day. Because I don't know where this move lower is going to stop. But what do I know? Well, as I was personally saying, I'm bullish. So in this case, my real objective for shorts is going to be, I'm going to use the current range. And in this case, I'm going to use all the way to the SMT because that's the low on ES. So I want to refer to the same range. And I'm going to look for the first discount inefficiency. Since it's such a large range, I'll go to the 15 minute. See, in this case, you could have even gotten all the way up to an hourly chart, I think. Yeah, definitely. It's a very, very long range in terms of time, right? Formed at 3 a.m. That's a few hours. But looking at it, if you were looking at it on a 15 minute or 30 minute chart, your target is going to be that order block. So let's go back to the 1 minute so we can see something here. Let's remove this range. And this blue line would be your retracement objective. That's beautiful. So this is your mechanically established objective. It's a 15 minute bullish order block right here. And if you're unfamiliar with the rules or the models that I'm presenting, definitely do have a look at my model video. It's pinned on the YouTube channel. Definitely great. But opening range low with that level, that would be, as I said, the partial objective here. With the level being just 2R, I'm guessing. Just under 2R. So very, very nice there. But then what do you target? Well, I'm looking at my 5 minute swing lows. I'm going to take profit at every single one of them, or at least trail my stop. But data low is going to be a clear 1. And then if you're still holding, 4 standard deviations is always nice. Truth is, I'm getting trailed somewhere here, trailing my stop. As I always say, I look for a retracement. Then once we break back down below here, this is my new stop loss. I see a retracement, a continuation. When we break this, my new stop loss is this range. Once again, I want to allow it to retrace into this range, but not break it. So this is where a trailing stop would have ended for me. But a very nice short, nonetheless. It's a big move and just didn't give too much risk to reward, just like the morning long. Okay? The important part is not the return you get from it, the consistency. At least that's what I believe in. And right now I'm seeing one successful long, one successful short. So truth is, there is no reason in hell why you should keep trading. If you were looking for longs, you got an opportunity. If you were looking for shorts, you got an opportunity. The only reason why you'd still be looking for a trade on a day like this, following my rules once again, is because you missed those. And as I always like to say, if I miss it, I'm done. Because I see the trade that I missed. And no matter what, the next trade I take, I should never have taken. Because I should have been in that move, that first move. So bullish or bearish, you've had some great opportunities there. Don't really have much to add on a day like this. If you guys saw some specific setups, or maybe there are some time periods during the day that you'd like me to review more specifically. But as I said, truth is, you should have been here. If you're trading the Rise model at least. If not, PM continuation opportunities using the 2 p.m. open right here. Sure, there was a long opportunity somewhere here. It was right here, actually. It would have allowed you to go all the way to 0.5, opening range high. But that's not high probability that late in the day like this after we've seen so much back and forth movement. So I would definitely focus on these first two trades. Perhaps you were looking for anything more in the AM, but as I always say, 11:30 is a hard stop for me, and there's nothing there, right? There's possibly a short opportunity here that would have given you a little bit. I mean, I'm always looking for breakers, right? If you didn't take that one, then there was this bearish breaker here, which also worked. So even if you miss those first ones, all I'm seeing is wins. If only, well, I see actually a failed long here if you're trading breaker blocks. So one stop loss long if there was anything. So basically, if you lost money today, why the hell aren't you using breaker blocks? And yes, that is me trying to entice you guys. You know, small crowd tonight, so I'm being a little bit more picky. Do you guys have any questions about what we saw? Right, there was a lot of SMT everywhere, by the way, guys, if you're wondering, right, at most of these lows. And even just looking back here, I'm looking at the opening range low. A lot of SMT here. So basically, just a lot of reasons to get out of this short. So this was a trade that would have been a little hard for me to hold. I would have just went break even as soon as I saw the SMT. See here at this low, is that SMT? These are equal on ES, which means it took it out. So no SMT here. First SMT came when we took out opening range low here. So for me, that would have been a sign to go break even. And it's this level right here. So see, that's right as when my partial gets hit. So nothing more to add there. Seeing you type, Alex, I'm going to wait and see if you have a question here or if it's nothing specific. For the short trade, I took the fair value gap on top of the one you used. What is the rule to choose the right fair value gap? You chose the right one. That's the truth, right? As I was saying when I presented it, I always say that it has to be in close proximity, okay? But there's no actual number for it. So see, I use my tool to check at the distance, right? And it's like, okay, well, 9.5 handles. Sometimes I'll say that's good enough, and sometimes I'll say it's too much. So how can we mechanically establish it? Well, when we're reviewing these, I like to look at the worst case scenario. So in this case, the worst case scenario is going to be, well, you took the worst entry, right? So we'll always be reviewing the worst possible entry because, well, you guys know, especially you, Alex, right? I see you all the time. AZ a lot more often recently as well, I believe. But you know that just from these reviews, we showcase incredible results in the markets, looking at a mechanical approach, right? Let's be honest here. So with all of this, how do you, I guess, decide if it can be better or not? Well, I don't. I always choose the worst option. I don't like to give people a false idea of what's going on here. So the real entry would be, hey, I'm waiting for something that's in close proximity or overlapping with my breaker block, and it is this fair value gap right here. And then your stop would be, here you have fair value gap, order block, SMT invalidation point of your breaker. This, perhaps you didn't see the SMT and this was your stop, but still much, much better results than looking at the other entry with your 3 area stop loss rule. So it's really just a question of pessimism, but Alex, you got the right entry. I myself would have been waiting for us to return here or at least trade into this gap. And you want additional confluence from this. Well, very simple. Premium and discount of that current leg. And more precisely, we can look at this high and low. But what's the first premium and efficiency here? This one. Even if we look at the larger range, what's the first premium and efficiency here? This one. So that's the one that's going to be your trade. Whenever you see a large expansion before your entry, this is a continuation entry. So I wait to see us tap into here. I wait to see us reverse it. And then I wait for an entry signal. Which, for example, changing the state of delivery here when we created this order block is a signal to go short. But that's some more advanced stuff that I don't plan on sharing anytime soon in detail. Why? Not because I'm trying to gatekeep anything. Just because it is absolutely worthless. It's fun to understand more things that's going on in the markets, but it doesn't mean it makes you money. What makes you money is having an edge and following that edge no matter what. Like this. No way to lose money on a day like today if you're following that clear model. Do we have any final questions before we call it a night here? While looking at the lunch trade, I was looking for unicorn entry to go short to lunch low, but price went all the way up. What can tell you if price will continue? Okay, so when I look at lunch rates, it's very hard to use as a mechanical framework, right? Of, oh, we take out lunch high, we're going to go for lunch low. And so the easiest way to filter that, as you were saying, is really just to look at, let me just mark that out. The easiest way to go about it is to just wait for a setup, right? So if a breaker block forms, I'm going to trade it, whatever. So in this case, if you're looking to go short after this lunch high, well, did you even form a bearish breaker? Did you have an entry for that? You saw one? There is probably one, but a small one. It's probably somewhere in here. I mean, I do have swing high to swing low. This didn't take out the high. This didn't form a breaker. I mean, unless it was formed with SMT, which I'm not seeing quickly. Maybe if I spent more time looking at it. I'm pretty sure someone's going to be in the comment of the recording on YouTube and tell me, look, it's 1358. Look, it's a breaker. And I'm going to feel stupid, but I don't see one. So for now, 1340. Let's go look. 1340 right here. So you don't have a range here. So for me to look for a breaker, I need swing high to swing low. Here, yes, you have a swing high, but where's your swing low? Lower time frame, definitely. There is definitely a lower time frame breaker here. So, you know what? Why not? Let's go look at it. Let's go to the 30-second chart. And there is here, well, actually, not on the 30 seconds. Let's go down to the 15-second. We'll find one. After the lunch high raid, swung high to swung low. That is no. Well, I mean, you have a breaker here. There we go. 1341 and 30. And of course, you have one a little earlier there as well. But see how price took out the high and keeps going up? And quite significantly at that point in time, right? It's not just a small move. We ran 40 additional handles. Give me a second, Woody, and I'll answer it. Let's just finish this point. Why don't I trade the lunch short in this case? Well, first of all, because I'm clearly bullish and I'm looking for opening range high and that 0.25. This is based on my higher time frame chart, Alex, right? As we discussed since the start of this. But if I was bearish, then why am I not trading this? Because for me to trade a lunch trade, I need to understand that the lunch high is the objective. And once that objective is met, price can now go lower. That is my whole mentality behind that framework. And that's not true since we keep running higher. This is a simplistic approach. This is how I do it, psychologically speaking, right? Yeah, exactly. It is very simple, Alex. And the first thing that comes to mind is like, okay, it makes sense. If that was my target, well, it would reverse once we get there, right? But truth is, this is just a good loss. You have the statistical edge telling you that lunch low is a high probability target. Just take the short if it happens. There's nothing there. I would call that a good loss. To answer your question, well, what, Dottie? I don't want to say that wrong. I'll just call you Wall for now, right? But you just go through my videos on YouTube. That's definitely a great place to start, right? All of these events, just like the one today, is going to be recorded. And there's nothing better to learn, in my personal opinion, that's why I do these, than to look at what happened today and how my specific model goes about it. If you want to learn my model as well, as I said, there's a video pinned on my YouTube channel, on the Rise YouTube channel. You can also find it if you go into Discord in the category Rise. You'll find resources rice trading model. There are a few threads that were posted there along with the YouTube video link. So a lot of information there. But if you want to learn the model, there's a complete video about it. If you want to see, well, now that I know what the model is, how do I use it? Well, every single price action review covers all the setups that specific model provided for the day, just like we did today, right? Every single trade you see me reviewing is based on the Rise model and nothing else. Simply the Rise model. I'm going to bring this guy back. Let's go back to the 1 minute here. Oh, it was still there. Okay. Pleasure. I'm seeing you type, so I want to let you finish here real quick before we call it, as I was saying. By the way, guys, new mic on the way, right? I just got the confirmation with the tracking, so very, very soon. On that note, though, we're going to call it a night. I will not be looking to trade tomorrow. No high impact news doesn't interest me, and I'm going to be waiting for FOMC before engaging back with price. So you guys have a good one, and we'll see each other back here on Wednesday for another one of these price action reviews. Bye, guys. Have a good one.